Warren Buffett. The name itself has become synonymous with wealth, long-term investing, and financial wisdom. He's one of the richest men in the world, but he still lives in the same house he bought in 1958. He eats McDonald's for breakfast, drinks 5 cans of Coca-Cola a day, and avoids fancy technology. But don't let his modest habits fool you. Warren Buffett is one of the greatest investors in history, a man who turned a small investment partnership into a $900 billion empire. He's known as the Oracle of Omaha for his uncanny ability to see value before the rest of the world does. But who is Warren Buffett? How did he get here? And what lessons can we learn from his extraordinary life? This is the story of Warren Buffett. Warren Edward Buffett was born on August 30, 1930 in Omaha, Nebraska during the Great Depression. His father, Howard Buffett, was a stockbroker and later a U.S. congressman. From a young age, Warren showed an interest in numbers, business, and money. At just 6 years old, he started selling chewing gum door to door. By the age of 11, he bought his first stock, 3 shares of Cities Service Preferred at $38 each. When the stock dropped to $27, he panicked. But instead of selling, he held on. It rebounded to $40 and he sold, making a small profit. But that early lesson stuck with him. If he had held longer, he could have made much more. That experience taught him the importance of patience, a trait that would become central to his investing style. As a teenager, Buffett didn't stop experimenting with money. He delivered newspapers, sold golf balls, set up pinball machines in barbershops, and even filed his first tax return at 14. By the time he finished high school, he had saved the equivalent of $50,000 in today's money. He wanted to skip college and go straight into business, but his father insisted he get a degree. So Warren reluctantly attended the University of Nebraska and later applied to Harvard Business School. Harvard rejected him. Disappointed but not discouraged, Buffett applied to Columbia Business School, where he met Benjamin Graham, the father of value investing and author of The Intelligent Investor. This would change everything. Ben Graham taught Buffett the principles of value investing, buying undervalued companies with strong fundamentals and holding them for the long term. Buffett was an outstanding student and absorbed everything Graham taught. After graduation, he returned to Omaha and started working as a stockbroker. In 1954, Graham offered Buffett a job at his investment firm in New York. Buffett accepted and worked under Graham for 2 years. But eventually, Graham retired and Buffett went back to Omaha. That's when his real journey began. In 1956, Warren started his own investment firm, Buffett Partnership. With just $105,000 from family and friends and only $100 of his own money, he began investing using Graham principles. But Buffett added his own twist. While Graham looked only at numbers, Buffett also considered the quality of the business, its management, and its long-term potential. Over the next decade, Buffett's partnership averaged returns of over 25% per year, more than double the market average. By the time he closed the partnership in 1969, Buffett had become a millionaire and had already begun acquiring companies. One of those companies was BerkshireHathaway, a struggling textile manufacturer in New England. Buffett initially bought shares as a value play, thinking the company was trading below its intrinsic worth. But after a disagreement with the management, he took control of the company. Over time, he turned Berkshire Hathaway into his investment vehicle, a holding company through which he would acquire and manage dozens of businesses. Buffett later admitted that buying Berkshire was one of his worst investments, but it became the foundation of his empire. Through Berkshire, Buffett bought shares in companies like Coca-Cola, American Express, Gillette, Jayco, and eventually Apple. He also bought entire businesses, including See's Candies, Dairy Queen, BNSF Railway, NetJets, Fruit of the Loom. Each acquisition followed the same logic. Great businesses with durable advantages managed by people Buffett trusted. Warren Buffett's strategy is famously simple, but not easy. Here are the core principles. 1. Buy what you understand. He avoids complex businesses and sticks to what he calls his circle of competence. 2. Look for economic moats. Companies with a competitive advantage that can protect them over time, like strong brands or cost advantages. 3. Value over price. Buffett focuses on intrinsic value, not stock price. He buys only when a company is undervalued. 4. Hold for the long term. Buffett's favorite holding period is forever. He doesn't jump in and out of stocks. He waits patiently. 5. Trust in management. He invests in people as much as in businesses. If he doesn't trust the leadership, he won't invest. This philosophy has served him incredibly well. No story of Buffett is complete without mentioning Charlie Munger, his longtime business partner and vice chairman of BerkshireHathaway. Munger brought a more analytical and philosophical lens to investing. While Buffett was deeply influenced by Graham's numbers-based approach, Munger encouraged him to think more broadly. He urged Buffett to buy great businesses at fair prices, rather than fair businesses at great prices. Together, they've built one of the most successful investment partnerships in history. Their annual letters to shareholders are legendary, filled with wisdom, humor, and timeless advice. Despite his immense wealth, Buffett lives a surprisingly simple life. He still resides in the same house in Omaha that bought for $31,000 in 1958. He drives himself to work every day, rarely uses a computer, and doesn't own a smartphone. He's frugal, humble, and famously optimistic about America and capitalism. Buffett is also known for his philanthropy. In 2006, he pledged to give away 99% of his fortune to charity, mostly through the Bill and Melinda Gates Foundation. To date, he has already donated tens of billions of dollars. He also started the Giving Pledge with Bill Gates, a commitment from billionaires around the world to give away the majority of their wealth. Buffett married Susan Thompson in 1952, and they had 3 children. Although they lived separately later in life, they remained close until her death in 2004. In 2006, Buffett married Astrid Manx, a family friend. His children describe him as supportive but hands-off. He didn't spoil them with money and encouraged them to find their own path. One of the most surprising things about Buffett is how little he's changed despite his wealth. He's always remained focused on what truly matters to him: learning, relationships, and integrity. Today, Warren Buffett is in his 90s. He remains the chairman and CEO of Berkshire Hathaway and continues to make investment decisions alongside Charlie Munger, who is also in his 90s. But succession plans are in place. Greg Abel is expected to take over the day-to-day operations of Berkshire once Buffett steps down. His annual shareholder meetings in Omaha attract tens of thousands of attendees from around the world. They're often called Woodstock for capitalists, a testament to how much people admire his approach to business and life. In a world obsessed with shortcuts and overnight success, Warren Buffett reminds us that the best things take time, and that integrity is more valuable than money. Thanks for watching. If you enjoyed this video, don't forget to like, subscribe, and share it with someone who needs a dose of Buffett's wisdom today. See you in the next one.